నువ్వు పెట్టరా అన్నాడు. నువ్వు పెట్టరా అన్నాడు.
Hello, sir.
Yeah. Hello, my dear friends. A very good evening to all of you and welcome you all, guys. First of all, let me tell you that this session is specifically for CA inter students and that too in relation to the concept of indirect taxes, that is our GST. So let's spend some very good time for a couple of hours today and of course couple of hours tomorrow to get a good clarity of thought and insights about our provisions of GST syllabus applicable for our CA inter exam, so that we guys are prepared and ready for a kind of revision with all of us, so that we guys can enjoy the session, guys. And at the same time, during the course of discussion, you guys have got any queries and any doubts, feel free to ask me, guys. I'll be more than happy to reply and respond back to you guys. I will ensure that that time what is being spent will be very much worth it and very much useful. So without delay, my dear friends, let's start off our discussion. Come on, let's start, guys. So first of all, when I talk about CA inter GST syllabus, this CA inter GST syllabus once upon a time was for about 60 marks and subsequently it has now become only 40 marks. So it is as of now applicable for exam only for 40 marks, 60 marks for income tax and 40 marks for GST. But as we all know that in CA curriculum, every mark will count and every mark will make a difference. So it is very, very important that how much is the marks, we ensure that we get a good clarity of thought and become perfect in the concepts. So without any delay, we'll spend some good time and try to revise all the concepts of our GST and revise everything so that we are perfect with the concepts, guys. Are we ready? And I request all the students to mute yourself. Some of them have unmuted, so kindly mute because the voice is echoing. So please mute yourself so that it will be easy for us to proceed. I request all of you guys to mute yourself. Thank you so very much. Fantastic. So are you guys ready, sir? Can we start off? Brilliant. Fantastic. Good. Good that all of you guys are ready. So friends, first of all, as we all know that in GST syllabus, we have got some interesting topics like value of supply, place of supply, input tax credit, registration, composition scheme. Like this, we have got some good number of topics which are applicable for exam. And some of them could be those students who would have already listened to our Indigo Learn lectures. And some of them are those who already joined with us, but yet to watch the videos. Or some could be those who have directly learned by their self-preparation. Whatever category you belong to, my objective of the time what I'll spend with you today and tomorrow for 2 hours each is very clear that we'll revise all the concepts of GST once and ensure that if there is some area where we are lacking clarity, we get that clarity. And if there is some area where we don't know the concept, that concept we are becoming perfect. That's the whole idea here. Clear? So let me share the screen so that I can start the discussion, friends. Yeah. Just give me 1 second. I'll just connect my screen. Friends, can you please tell me if the screen is visible for all of you?
Yes, sir.
I mean, while replying, please message in the chat box. Because if you guys unmute yourself, the voice is echoing. Humble request, guys. Yeah, thank you so much. Done. So, friends, Don't write anything on the screen, please. Kindly don't write anything on the screen. Yeah. So friends, we have got two modules there, module 1, module 2, and that is module 1, we have got topics like GST introduction, supply under GST, charge of GST, exemptions, and then we have got an interesting topic like value of supply and time of supply. And then in module 2, we have got topics like input tax credit, registration, tax invoice, payment of tax and returns. These are the topics what we have got in module 2. So today's session, we'll spend some good time on discussion about the module 1 topics, and subsequent to that, tomorrow's session we'll talk about module 2 topics. Yeah, let's start. So guys, and one more small announcement, friends, that is in Zoom we have got a restriction on limit of only 100 participants. So whoever is unable to join here, you guys can directly follow on YouTube and you can watch the video on YouTube, guys. Thank you so much. Yeah. So friends, first of all, when I talk about GST, the first topic what we have got is introduction to GST, which is very, very important, where there's a high possibility that a question can trigger in exam in terms of where they'll ask what was the need to introduce GST. Now, what is the need to introduce GST? The point is very clear. The need to introduce GST is based on drawbacks that were existing prior to GST. That is, number 1, seamless flow of credit. What is that word? Seamless flow of credit. Now, what does that mean? When I say seamless flow of credit, for example, prior to GST, let's say there is a chartered accountant. Shiva Teja itself, you take an example. When Shiva Teja is a chartered accountant who is there, I used to pay service tax. When I'm giving service to my clients, I used to pay service tax. But let's say, for example, when there is Shiva Teja on providing services, I straight away used to pay some tax known as service tax. Obviously, that is a tax what I was supposed to pay. Now, let's say, for example, there is one person, Mr. X, who is a laptop dealer. What is he, guys? Laptop dealer. And this laptop dealer, what he has done is, he sold a laptop to Shiva Teja at a value of 1 lakh rupees. I repeat, guys, he sold the laptop to Shiva Teja at a value of 1 lakh rupees. Now, when the laptop is sold to Shiva Teja at a value of what value, my dear friends? 1 lakh rupees. Now, please tell me, what is the tax that he would have charged? Come on, guys. Good, very good, good participation. So let me tell you guys, the tax what dealer would have charged is definitely VAT, my dear friends, for a simple fact and reason that the VAT stands for value added tax. That was the tax which was existing prior to GST, which was levied on intrastate sale of goods. For intrastate sale of goods, there was CST, and for intrastate sale of goods, there was VAT. And this was the tax which was levied prior to GST. So if that is the case, this 1 lakh, let's imagine the VAT rate is 10%, which is nothing but 10,000. Now, basic fundamental concept we know is that any tax which is paid on purchase, I repeat, any tax which is paid on purchase can be claimed as input tax credit, and we can use it for set off while paying output tax. Now, here question is, can VAT credit be claimed and used for paying service tax? A very brilliant, interesting question, guys. Come on, what is the question I asked? Can VAT credit be claimed and used for paying service tax? Tell me, guys, come on. Can we take VAT credit and use it for paying service tax? Without any second thought, answer is no, my dear friends. The reason is very clear, because VAT was payable to state government, whereas service tax is payable to central government. We cannot use a state level tax to pay the central tax. Neither we can use central tax to pay state level tax. Like this, there was a concept of state level taxes separate, central level taxes separate, because of which we could not happily, smoothly claim input tax credit. And that was the point, my dear friends, that once upon a time, Constitution in 7th schedule. Come on, guys, Constitution which schedule? Constitution in 7th schedule, they have given 3 lists. One is union list, other is state list, and the third one is very clearly concurrent list. Come on, guys, what are 3 lists? Union list, state list, concurrent list. And union list contains those items of taxes on which power to levy tax is with central government. I repeat, guys, union list contained those items of tax on which power to levy tax is with central government, whereas state list contains those items of tax on which power to levy tax is with state government, and concurrent list contains those items of tax on which power is there with both central government and state government together to levy and collect the tax. I repeat, my dear friends, please observe that carefully. Union list contained those items of taxation on which power is there exclusively with central government. State list contained those items of taxes on which power is there exclusively with state government, whereas concurrent list contains those items of taxes where power is there with central government and state government together. Now, one point to be noted that prior to GST law, there were some taxes which were levied by central government and some taxes which were levied by state government, but there was never and ever a tax in India which was levied by central and state together. I repeat, there were some taxes in India which were levied only by central government, and there were some taxes in India which were levied exclusively by state government, and there were some taxes in India which were levied by central or state, but there was no tax which was levied by central and state together. But for the first time in the history of India, they brought some tax known as GST, which is levied by central and state together. How it is levied, my dear friends? Central and state together. So earlier, very clearly the concept was some taxes were levied by center, some taxes were levied by state. But there was never a tax in India levied by central and state together. But for the first time in the history of India, there has come some tax which is levied by central and state together. That is the reason why we call this GST as dual GST model. Come on, what model we call it, guys? We call it as dual GST model, since it is levied by central and state together. Since it is levied by whom, sir? Central and state together. Since it is levied by central and state together, we call it as dual GST model. And this dual GST model is basically copied from Canada, guys. I repeat, this dual GST model is basically copied from where, sir? Canada model. Technically, we call it as Canada dual GST model levied by central and state together. Clear, friends? Very interesting, guys. No doubt about it. Please. Now, so earlier, what was the story? There were some taxes levied by center, some taxes levied by state, but there were no taxes levied by center and state together. For the first time in the history of India, some taxes come which is levied by center and state together. And that is the primary reason why there was a need to amend the constitution. I repeat, there was a need to what, sir? Amend the constitution. In order to bring GST, they had to amend the constitution. Now, why did they amend the constitution? Since for the first time they are bringing some GST, which is levied by central and state together, they had to amend the constitution. And for that purpose, they brought Constitution 101st Amendment Act 2016. What is that they brought? Constitution 101st Amendment Act 2016. This has been brought in order to ensure that they bring GST into India. And the reason for that is dual GST model, which was never existing in India before. Makes sense, right? So now, first interesting question. When did GST come into force? The GST has come into force on 1st of July 2017. But one point to be noted that as on 1st of July, all the states in India have agreed for GST except Jammu and Kashmir. But Jammu and Kashmir has given consent to GST on 8th of July 2017. 8th of July 2017, Jammu and Kashmir also has given consent for GST. So technically, with effect from 8th of July, GST is applicable to whole of India, including Jammu and Kashmir. With effect from when, sir? 8th of July, GST is applicable to whole of India, including Jammu and Kashmir. This point is important to be noted. And now it's also important to discuss what were the taxes which have been subsumed under GST. That is important, where we have to know what are the taxes which have been brought under GST. Now we should not tell, sir, income tax I will not pay because GST has come. One nation, one tax. You cannot tell that. Income tax is a direct tax which is still in force. Income tax is a direct tax which is clearly still in force. Now what are the taxes which are subsumed under GST? There are some central taxes, there are some state taxes. Central taxes like excise duty. This was earlier levied on manufacture or production of goods. Excise duty. Then we had some tax called service tax, the most popular tax. It's a tax levied on services. Then we also had some interesting tax known as CST. CST stands for Central Sales Tax, which was levied on interstate sale of goods. In case of intrastate sale of goods, VAT was levied, but in case of interstate sale of goods, CST is levied. No doubt about it. Clear, friends? Then, next one, next interesting point. There used to be something known as CVD and special CVD, which was levied in case of import of goods. Earlier, once upon a time, I repeat guys, earlier, once upon a time, if you used to import goods from foreign country, we were required to pay BCD plus CVD plus special CVD. I repeat, let me write below. Come on, see here guys. Earlier means prior to GST. Prior to GST, if we were importing goods, we were required to pay BCD plus CVD plus special CVD. All this we were required to pay. But now, after GST has come into picture, after what has come into picture? GST has come into picture. What we are required to pay is only BCD plus IGST. Now don't get one out. Sir, what is this word IGST? Sir, there are two things. Under GST law, we do not use the word purchase of goods, sale of goods, providing service, rendering service. We only use one word known as supply. What is that word, sir? Supply. And in this supply, there are two types of supply known as intrastate supply and interstate supply. Come on, what are the two types of supply? Intrastate supply and interstate supply. In case of intrastate supply, in case of what supply? Intrastate supply, we charge CGST and SGST. CGST part central will take, SGST part state will take. Clear, friends? And in case of interstate supply, in case of intrastate supply, we charge CGST and SGST. And in case of interstate supply, what we charge is directly IGST, which stands for Integrated GST, Integrated Goods and Services Tax. So friends, what are the two types of supply? Intrastate supply, interstate supply. For intrastate supply, we charge CGST and SGST. For interstate supply, we charge IGST. So I repeat, prior to GST into picture, in case of imports, they used to charge BCD plus CVD plus special CVD. But after GST has come into picture, they started charging only BCD plus IGST. That means you have to observe that BCD is still there. BCD stands for Basic Customs Duty. So customs duty is still there. Don't think that GST has taken away customs duty also. Customs duty is still there. Don't worry at all. Customs duty is still in existence. Come on. Going back. So what are the taxes subsumed under GST? Excise duty, service tax, CST, CVD and special CVD. Finally, surcharge and cess related to above taxes. If there is some surcharge or cess which is related to above taxes, that is also gone. When tax only gone, where is the question of surcharge and cess? And in case of state level taxes, what were there? Most popular VAT, value added tax, then luxury tax, then octroi, which was also called as entry tax. Then there used to be some tax known as entertainment tax. When we used to go to pictures or movies, we were required to pay entertainment tax. Now gone, we do not have any concept of entertainment tax. What we have is only GST. So that is the reason why they told the dialogue, one nation, one tax. What tax they told? One nation, one tax. Only one tax in India for indirect taxes. Income tax is still there. Income tax is a direct tax. But for indirect taxes, we have got one nation, one tax, that is GST, which stands for goods and services tax. And finally, surcharge and cess related to above taxes. Like this, there were multiple taxes which were existing prior to GST, and now all these taxes have been subsumed under GST. Subsumed means which got combined into GST. Henceforth, there are no taxes like this which will still be in existence, because now we have got only one nation, one tax, that is GST. Next point. Now, interesting question is, what is the definition of GST? That is important. Now, don't tell me, sir, goods and services tax. I know, but that goods and services tax is not a definition. It's only an expansion. It's a full form. It's only a full form. Then, what is definition of GST? They clearly specified that GST is a tax one second, guys. We are looking at definition for GST, friends, not the full form for GST. Full form for GST already we know. Come on. GST is a tax on supply of all goods. I repeat, GST is a tax on supply of all goods or services or both, except alcoholic liquor for human consumption. So this language is very, very important. Please see that very carefully, guys. So what is the definition for GST? GST stands for, it's a tax on supply of all goods or services or both, except what? Alcohol liquor for human consumption. So alcohol liquor for human consumption is one such product which is permanently kept outside GST. So on that alcohol liquor for human consumption, GST will never ever apply. Clear, friends? And let me also tell you an interesting point which I'm sure all of you know. That is, there are 5 petroleum products. What products are? 5 petroleum products which are temporarily kept outside GST. So friends, what is definition of GST? GST definition is very clearly, it's a tax on supply of all goods or services or both, except alcohol liquor for human consumption. And there are 5 petroleum products which have been temporarily kept outside GST. What are the 5 petroleum products? Petroleum crude, high-speed diesel, motor spirit, natural gas, and aviation turbine fuel. Friends, what is that language, my dear friends? Yeah. Am I visible, guys? Yes, thank you. So friends, GST is a tax on supply of all goods or services or both, except alcohol, liquor for human consumption. And there are 5 petroleum products which have been temporarily kept outside GST. And the 5 petroleum products are petroleum crude, high-speed diesel, motor spirit, natural gas, and aviation turbine fuel. These are the 5 petroleum products which have been temporarily kept outside GST. So at any given point of time in the future, they might come into GST. Highly possible. Are we clear? Very, very interesting and important concepts. No doubt about it. So one last time, what is GST definition? It's a tax on supply of all goods or services or both, except alcohol, liquor for human consumption. And 5 petroleum products are kept outside GST. That is petroleum crude, high-speed diesel, motor spirit, natural gas, and aviation turbine fuel. Very interesting concepts. No doubt about it. So friends, can you please tell me what are the 2 types of supply? Intrastate supply, interstate supply. And intrastate, what is the tax we will charge? CGST and SGST. Intrastate, what will you charge? IGST. That's important. But you have to observe an important word here, that GST is a tax on supply of all goods or services or both. So it is important to know the meaning of this word called supply, which is extremely important. In fact, we have got one separate chapter altogether, second chapter, which only deals with the concept of supply. One complete chapter is there for the concept of supply. So you have to understand how much depth is involved in the concept of supply, which is extremely important. No doubt about it. Are we clear with this? Very good. So friends, on which date GST started? On 1st of July 2017. And Jammu and Kashmir said yes on 8th of July 2017. And we discussed that there are 3 lists: union list, state list, concurrent list. Union list contained those taxes on which power is there with central government. State list, those taxes, power is there with state government. Concurrent list, both central and state. But prior to GST, there was no tax in India which was levied by central and state together. For the first time, they brought that tax. That's why we call it as dual GST model, which is copied from Canada. In fact, you have to get that small difference between France and Canada. In exam until question has come, students got excited and wrote France. But let me tell you guys, France is the first country to introduce GST. But India did not copy France model. India copied Canada model. So the question if they ask, which country model India adopted? Don't write France. Answer is what? Canada. Please. But France story is what? France is the first country in the world to introduce GST. Way back in the year 1954. But India introduced in 2017. It will take some time in India, no doubt. Yeah. But we did not copy France model. We copied which model? Canada model. Dual GST model. Clear? So intrastate CGST and SGST, interstate IGST. And the last time definition of GST. It's a tax on supply of all goods or services or both, except alcohol, liquor for human consumption. 5 petroleum products are temporarily kept outside GST: petroleum crude, high-speed diesel, motor spirit, natural gas, aviation turbine fuel. That's it. So these are the important key points what you have to keep in mind in the first topic. Apart from one more small key point, that is, government has formed one committee known as GST Council, which is a committee of central and state level members who sit together and take any decision. Because if any change has to be done in GST, it will be done by the central government. I repeat, any change in the GST, let's say change in rate or change in law, amendment in rules, any change can be done by the government, central government, only on the recommendations of GST Council. Or whose recommendation? GST Council. Now question is, who is there in the GST Council? There are some members from center, there are some members from state. And what they told is, center side there are 2 members. Number 1, Union Finance Minister, presently our Madam Ji. Yeah, Union Finance Minister. Second, Minister of State for Finance. By seeing that word state, don't think he's a state level person. He is a central level person only, but his designation is Minister of State for Finance. is somebody like a deputy finance minister. Yeah. So what are the two guys? Union finance minister, then Minister of State for Finance. And this Union finance minister will act as chairman of GST Council. They will act as what, sir? Chairman of GST Council. And from state side, we have got every state representative. Every state representative. Don't think that every state finance minister, it's not necessary that from every state finance minister should come. It can be finance minister, chief minister, or any person. But from every state, one representative should come. So come on guys, who is there in GST Council? From center side, there are two members, Union Finance Minister, Minister of State for Finance. And from state side, every state, one representative will come. Now what will these guys do? These guys will sit and discuss any change related to GST law, because any change in GST will be done by central government on the recommendations of GST Council. Now some interesting point to be noted is that center, these two guys together, they have got 1/3 weighted vote. Come on, how much weight they have got, guys? Those two guys together, they have got 1/3 weighted vote. That means if those two guys say yes, 1/3 is done. And from state side, all together, all state representatives together, they have got 2/3 weighted vote. When I say 2/3, that means technically it is 66.67%. So please observe, my dear friends, 1/3 is 33.33% and 2/3 is 66.67%. So if center says yes, 33.33% is done. Then state side it is 66.67%. But one great point to be noted is to pass a resolution. When I say resolution, that means to take some decision. To take some what? Decision. There should be 3/4 majority. How much majority, sir? 3/4 majority. That means there should be 75%. So if you observe carefully, if center alone says yes, 33.33% is done. If only state says yes, 66.67% is done. But to pass any resolution, that is to take any decision, how much should be done? 75% majority should be there. So in short, directly or indirectly, what they are trying to say is that center alone or state alone cannot take any decision. If any decision has to be taken, then both center and state together should join the hands. Only if center and state together join the hands, then only it is done. In law, you would have heard about some word called special resolution, 75% majority, something like that. So let's take an example like this. Let's say, for some matter, center told yes. That means what? 1/3 is done. Correct, guys? Now, states, what had happened is 24 states attended. That means what? 24 states attended the meeting. It's not necessary that all state persons should come for the meeting. No. How many people came? Only 24 state people came to the meeting. And when 24 people came for the meeting, let's say 18 said yes. 18 said yes. So from state's point of view, what is the weighted vote? How do we calculate weighted vote? Is how much vote they have got? 2/3. That's the weight what they have got. 2/3 into 18 divided by 24. 2/3 into 18 divided by 24, because 18 states told yes, out of 24 attended. So 2/3 into 18 by 24 is 50%. And here 1/3 is done means 33.33%. So total is 83.33%. Therefore, resolution is passed. When I say resolution is passed, that means decision is taken. It is something like decision decided based on majority, but that too we want 3/4 majority, which is nothing but 75%. Very clearly. So this is a story of what council, guys? GST Council, where there are central level members, state level members. And central side we have got two members, that is Union Finance Minister, Minister of State for Finance. From state side we have got every state representative, and center, both of them put together, they have got a weight of 1/3 weighted vote. And from state side, all the states put together, they have got a weight of 2/3 weighted vote. But to pass a resolution, there should be 3/4 majority, that is 75%. That's it. I hope we are clear with this. Come on, please respond. Yes, you can
Yes,
listen
sir.
to the chat box.
Yes, sir.
Yes, sir.
Perfect. Thank you so much, guys. Thank you. Brilliant. I love your participation. Thank you, guys. Come on. So with this discussion, we're done with the story of the first interesting topic that is about related to the basics of GST, introduction, something important. So now, without any delay, let's please spend some good time on discussion about the concept of supply. Now, what is supply? Very interesting. Listen carefully, guys. Let's talk about the concept of supply. As I told you, under GST law, we do not use the word purchase of goods, sale of goods. We do not use the word purchase of goods, sale of goods, or we don't use the word providing service, rendering service. The only one word we use is supply. This word has got terrific importance because this concept is important and high possibility question will come in exam. And ultimately, a transaction is taxable only if it is supply. If it is not a supply, there is no tax at all. So we don't use the word purchase and sale. We use the word inward supply, outward supply. What language we use? Inward supply and outward supply. Clear? So come on. Now look at. When I talk about this word supply, my dear friends, this concept of supply is defined by Section 7 of CGST Act. Yeah. And let me tell you, generally from this topic, 4 to 6 marks keep coming in the exam. Almost every time some question keeps coming. Either it is supply or it is composite or mixed supply. Some or other topic will keep coming in the exam for 4 to 6 marks. That is the general trend. Clear? Done. So supply is dealt with which section? Section 7 of CGST Act. Now here, when I talk about the concept of supply dealt by Section 7, we divide this Section 7 into 7.1, 7.1a, 7.2, 7.3. Come on. How are we dividing this? 7.1, 7.1a, 7.2, 7.3. One after other we'll discuss because this will take some time and it's important also, on which we can't take chance. So we have to listen very clearly and very carefully. So 7 is divided into what? 7.1, 7.1a, 7.2 and 7.3. First, let me talk about Section 7.1. And in this 7.1, the beautiful point to be noted is 7.1 is again divided into 7.1a, 7.1b, and we'll also have 7.1c. In 7.1 we have got 7.1a, 7.1b, 7.1c. 7.1a says, listen, supply includes all forms of supply of goods or services or both. Come on, guys. Supply includes what, sir? Supply includes all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease, or disposal made or agreed to be made. Come on, guys, what is the language we wrote so far? Supply includes all forms of supply of goods or services or both. I repeat, they include all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease or disposal, made or agreed to be made for a consideration by a person in course or furtherance of business. Come on, guys, very important language. Let's read that language once again, friends. Come on, what is the language used? Supply includes what? All forms of, that means what? All types of supply of goods or services or both, such as what? Sale, transfer, barter, exchange. Friends, what is the difference between barter and exchange? We always say barter means exchange, but answer is no. Barter, exchange, there is a small difference. In barter, there is no monetary consideration involved. But in exchange, there is a monetary consideration involved. Practically, when we go to a cell phone shop to buy one new cell phone, we might have an old cell phone which we might exchange, but we can't do barter. Tell him that take old phone, give me a new phone. You can't do that. So here what is covered? Sale, transfer, barter, exchange, license, rental, lease. Rent and lease, small difference is that generally rent is for short term, lease is for long term, and in lease more rights are given to the lessee. License, rental, lease or disposal. Disposal means what? Sold as scrap. So what? Pay GST. Made or agreed to be made. Made means done. Or agreed to be made means agreed to be done. For what? For a consideration. For what? Consideration. Consideration could be monetary form or non-monetary form. Anything is possible. Made or agreed to be made for a consideration by a person in the course or furtherance of business. So it is very, very important that it should be in the course or furtherance of business, and that too there must be a consideration. Now please understand, let me ask you one question. Think properly and tell. Sir, let's say you have got one old car with you. Old what? Car. This car became very old. You decided to sell it off. You put up on OLX or somewhere and you sold your old car. Old car you sold. Okay? I'll ask you one question. Is it supply?
No, sir.
100% it is not a supply, my dear friends. The logic of that point is very, very clear because it is made for a consideration. It is an exchange. It is for a consideration, but it is not in the course or furtherance of business. When I say course of business, you are doing that for in the course of business. Furtherance is something like expansion of business. So since it is not in the course of business, we don't call it as supply. Kindly respond to the chat box. I'm waiting for your answer. Yeah. So supply includes all forms of supply of goods, services or both, such as sale, transfer, barter, exchange, license, rental, lease or disposal, made or agreed to be made for a consideration by a person in the course or furtherance of business. Yeah. Some query from student. Sir, for tobacco, currently what is levied? Let me tell you, in case of tobacco, tobacco is one such product which is covered in GST also. Old tax also is being levied. So tobacco is one such product on which GST also, old tax also, both are being levied. No doubt about it. Old central excise duty cess and also current GST, both are being levied with respect to tobacco. That's the answer for your question. Yeah, I'll proceed. So what is 7 money? Supply includes all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease or disposal, made or agreed to be made for a consideration by a person in the course or furtherance of business. Very important. Then 7(1)(b) talks about import of services. What is that language, sir? Import of services. Import of services for a consideration. Import of services for a consideration, whether or not in the course or furtherance of business. This is an interesting language which you have to understand very clearly. What is the line used? Import of services for some consideration, whether or not in the course of furtherance of business. So if you import for business use or import for personal use, still it is regarded as supply. Come on guys, what is the language I just told? If you import for business use or import for personal use, still it is regarded as supply. Classic example. So we all know something app like Netflix. Netflix is not an Indian app, it's a foreign app. When you are making payment for Netflix subscription, you are importing some service and it is not for your business use, it is for your personal use. But still it is regarded as supply. Why? The logic is simple, because import of services for a consideration, whether or not in the course or furtherance of business, is still regarded as supply. So if you observe friends, in first point 7.1a, we told that it should be for a consideration and that too in the course or furtherance of business. But in 7.1b, we are saying what? Import of services for a consideration, whether or not in the course or furtherance of business. So even though it is personal use, still it is regarded as supply. Then finally 7.1c, very important. Next table. Let's talk that in detail, because 7.1c, high possibility that question will trigger an exam, no doubt about it. Something important, so which we can't take chance. So I want you guys to get full clarity on the concept of 7.1c. Very important. Yeah. So what is 7.1a guys? 7.1a talks about supply includes all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease or disposal, made or agreed to be made for a consideration by a person in the course or furtherance of business. 7.1b, import of services for a consideration, whether or not in the course or furtherance of business. Then finally 7.1c, important, please listen. C talks about transactions regarded as supply, even though there is no consideration. See the line, very important. Transaction, what's that? Regarded as supply, even though there is no consideration. So even though consideration is not there, still it is regarded as supply. That's why it's very interesting. So see that line, come on. What is that line? Please repeat, please look at that point, come on. Transactions what? Regarded as supply, even though there is no consideration. So why it is very interesting? Because even though consideration is not there, still we are saying it is supply. That's why it's very interesting. Clear friends? Now listen. What are the major interesting points in this? There are 4 important points which are covered in the concept of transactions regarded as supply, even though there is no consideration. Listen carefully, friends. First and foremost important point, permanent transfer. I repeat, what is that line, sir? Permanent transfer or disposal. Disposal is something like sale, permanent transfer or disposal of business asset. Business what? Assets on which ITC is claimed. This line is important. On which what is claimed? ITC is claimed. If ITC is claimed, then only we call it as supply, even though there is no consideration. So first line clearly says permanent transfer or disposal of business asset on which ITC is claimed. If ITC is not claimed, then we don't call it as supply. That's important. Second point, very important. Supplies between distinct or related persons in course or furtherance of business. What are the line guys? Supplies between distinct or related persons in the course of furtherance of business. First of all, who is this person? Distinct person. So let me give a small example. Let's say, small example. There is one person known as Shiva Teja. Let's say I've got one bakery business. I've got one bakery in Maharashtra, Shiva Teja Bakers, okay, which is owned by me, sole proprietorship. Now I open one more bakery, let's say in Tamil Nadu, with the same name, Shiva Teja Bakers. Now under GST law, they clearly told that even though your PAN is same, what is same? PAN. The PAN means permanent account number given under income tax. Even though PAN is same, you should take separate GST registration for each state. I repeat, you should take what, sir? Separate GST registration for each state, because GST registration should be obtained state-wise but not centralized. So as per law, Shiva Teja Bakery in one state, Shiva Teja Bakery in another state should have separate GST numbers. Now imagine there is some stock transfer. What transfer is there? Stock transfer is there from one state to another state. I just transfer the stock. I did not sell any stock from one place to another place. I have done a stock transfer. But law is telling, even though it is a stock transfer, still it is supply, because we are regarded as distinct persons. So in simple terms, we say that distinct person means cases where PAN is same but GST number is different. So distinct person case is what? PAN is same but GST number is different. We call it as distinct person. Then other word, what is the word? Related persons. Who is related? In related persons, they cover people like legally recognized partners, employer and employee, members of the family. They're all covered under related person. So if supply is there between distinct or related person in the course or furtherance of business, then it is regarded as supply even though there is no consideration. So for example, if I give something to my wife out of love and affection, then you should not tell it is supply, because it is not in the course or furtherance of business. But if I give something to my wife in the course or furtherance of business without any fees, still it is regarded as supply, because of second point, that is supply between distinct or related persons in the course or furtherance of business. Very, very important point. But one special point they told in the law is that gifts by employer to employee up to 50,000 per annum. To how much, sir? 50,000 per annum is not taxable. Clear, friends? Yes. So one student is asking, sir, what if we buy a necklace from jewelry shop? If we buy a necklace from jewelry shop, it is clearly supply. From whose point of view? From jewelry shop point of view. From jewelry shopkeeper point of view, it is definitely a supply. No doubt about it. Because that man is selling the jewelry in the course of furtherance of business. For him, it is in the course of furtherance of business. Yes? Good. So what is the first point, my dear friends? Permanent transfer or disposal of business asset on which ITC is claimed. Then what is the second point? Supplies between distinct or related person. Supply between what? Distinct or related person in the course or furtherance of business. Very, 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 very interesting language given by section 7(1)(c), which talks about transaction regarded as supply even though there is no consideration. Two more points, then we'll complete this. Third point. Transfer of goods from principal to agent. There's a transfer of goods from whom, sir? Principal to agent, and vice versa. When I say vice versa, that means what? Agent to principal. So there's a transfer of goods from principal to agent or from agent to principal. It is still regarded as supply even though there is no consideration. Finally, last point. Import of services from a related person. Import of service from whom, sir? Related person or from any of his establishment or from any of his establishment outside India in the course or furtherance of business. So if you observe second point, fourth point very clearly, it's very clearly given that it should be in the course or furtherance of business. So if it is not in the course or furtherance of business, it is definitely not regarded as supply. Yeah. So a couple of questions, let me answer that. One student is asking, sir, how gift will be traced? 50,000 will be checked by GST department. One point is very simple. If anything is paid to employee over and above the salary fixed as per the offer letter, which they call it as CTC, cost to the company. If anything is paid by employer to employee beyond cost to the company, it is something like a gift. So if that gift is more than 50,000, then definitely GST will come into picture. Yeah. Somebody is asking, sir, please tell third point. Yeah, what is the third point? Transfer of goods from principal to agent. Friends, we know that generally what happens is in your foundation or your intermediate, you would have heard about some concept known as consignment accounts. There is a consignor who sends goods to consignee. Consignee will sell the goods on behalf of consignor, for which consignee will get commission income. So when the goods are sent from principal to agent or agent to principal, it is regarded as supply, even though there is no consideration. That's it. This is a story of section 7.1, which talks about 7.1a, 7.1b, and 7.1c. 7.1a talks about supply includes all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease, or disposal, made or agreed to be made for a consideration by a person in the course or furtherance of business. 7.1b, import of services for a consideration, whether or not in the course or furtherance of business. 7.1c, transaction regarded as supply, even though there is no consideration. That's the story of section 7.1. Then, yeah, one special point let me tell you here before I proceed, sir. So there's somebody known as principal and there is an agent. Principal is sending goods to agent. Technically is doing a stock transfer. Yeah. Now tomorrow, agent will supply to whom? Customers. Agent will supply to whom, sir? Customers. When agent is supplying to customer, first point, if agent gives, listen please, if agent gives invoice to customer in his own name, what is the line, sir? If agent gives invoice to the customer in his own name, then transfer of goods from principal to agent is taxable. Come on. If agent gives invoice to customer in his own name, then only transfer of goods from principal to agent is taxable. Now imagine special case like this. That is, if agent gives invoice to customer in the name of principal. If agent gives invoice to customer in the name of what's that? Principal, then P2A is not taxable. When I say P2A, that means what? Principal to agent is not taxable. That's it. Simple answer. So if agent is giving invoice to customer in his own name, then P2A is taxable. If agent is giving invoice to customer in principal name, then what will happen? P2A is not taxable. So taxability of P2A will depend upon in whose name the invoice is given to customer. Simple. That's it. That's the end of section 7.1a, 7.1b, 7.1c. Now let me also talk about section 7.1a. Simple point. Section 7.1a talks only about what is supply of goods and what is supply of service. Service, what is there? So many things are service only. But the major point to be noted is that to call it as supply of goods, there should be transfer of right along with title. Title also should be transferred. That means what? Ownership should be transferred to call it as supply of goods. But by any chance, if there is a transfer of right, right is given, transfer of right without transfer of title. If there is a transfer of right without transfer of title. I repeat, what's the line, sir? If there is a transfer of right without transfer of title, we call it as supply of service. So to call it as supply of goods, there should be a transfer of right along with transfer of title. But if there is only a transfer of right without transfer of title, we call it as supply of goods, supply of service. So to call it as goods, there should be transfer of title. If there is no transfer of title, we call it as supply of service. Good. One interesting question. Sir, please explain difference between works contract and job work. Let me tell you, my dear friend, the only difference is that if I get one contract, if I outsource a part of contract to you, that's called as works contract. Job work means I give the raw material to you and get the work done. In works contract, I don't give raw material to you. Let me give a small example here, simple example. Let's say we go to a tailor, hand over shirt cloth piece. What did we hand over? Shirt cloth piece, and ask the tailor to stitch the shirt. What tailor is doing is called as job work. We don't call it as works contract. Since we are giving the material and asking him to execute, it is known as what? Job work. But we don't call it as works contract. I hope your question is solved. Yeah. So section 7(1)(a) is what, my dear friends? What is supply of goods? What is supply of service? That's it. Moving forward. Very, very important now. Listen. Yeah, one question from the student. Sir, if I am transferring stock from my head office to branch located in same state, will this constitute supply? Answer is yes, if both of them have got separate GST registration. In one state, separate GST registration is not mandatory, but if you want to opt, you can take. It's optional. In the same state, separate registration is not mandatory. So in simple terms, what they told in the law is that for multiple place of business, I repeat, for multiple place of business within the same state, separate registration is optional. So if you want to take, you can take, but it's not mandatory. For multiple place of business within the same state, separate registration is optional. Next. Let me talk about very, very interesting concept, section 7(2)(a), which deals with transactions neither regarded as supply of goods nor supply of service. This line is interesting. What's the line you wrote, sir? Transactions which are neither regarded as supply of goods nor supply of service. What does that mean? That means it is not goods, it is not service. Indirectly, what does that mean, sir? Come on, speak out, friends. It is not a supply of goods, not a supply of service. That means what? Very clearly, GST will not apply. What are those cases now? First point. Service by employee to employer in course of employment. Service by whom, sir? Employee to employer in the course of employment. That is the reason why practically no salaried employee pays GST, my dear friends. No salaried employee pays GST. Next. Service by court or tribunal. Third. Service by MP, MLA, or any public servant, president, prime minister, all these guys, they don't pay GST at all. Then, fourth point, service of funeral, burial, crematorium, mortuary, including transportation of deceased. First of all, person died. Again, if you tell pay GST, from where will you come and pay? Yeah, services of what? Funeral, burial, crematorium, mortuary, including transportation of deceased. So what are 4 points done? First one, service by employee to employer in the course of employment. Second, service by court or tribunal. Practical example of court is what? High court, Supreme Court, District Court, all this will come under that. And tribunal, income tax tribunal, GST tribunal, company tribunal, all this will come there. Then service by MPs, MLAs, or any public servant. Fourth point we all know. Services of what? Funeral, burial, crematorium, mortuary, including transportation of deceased. The last journey vehicle which will come. Not ambulance. I mean, if it is for somebody who already died, then it is exempt. Imagine one question you might get now. So what if person is not died, but is not well at all? Then that comes under normal ambulance service, which is exempt. That is covered in exemption list. So if person has got some health issue, he is being taken to the hospital in ambulance. That service is exempt because of exemption list. But transportation of deceased is covered here. Next. Fifth point. Sale of land or building. Except construction service. They are doing a construction service, that is definitely taxable. No doubt about it. Then finally, sixth point. Actionable claims. So actionable claim is something like what we can file in the court of law. A claim which can be actioned in the court of law. Classic example, my dear friends, if you purchase one lottery ticket, and for that lottery you have got 1 crore. If that fellow is telling you got 1 crore, but I'll not pay you, will you keep quiet? Will you go to the court of law and file a case? You can file a case in the court of law. That's why we say a claim which can be actioned in the court of law. Actionable claim. Other than betting, gambling, and lottery. That means on betting, gambling, lottery, GST will apply. On betting and lottery, GST will apply. Yeah. Some question in the chat box. Sir, what if someone dies in halfway in ambulance? No problem. Still don't pay GST. If it is normal ambulance service, it is exempt. And if it is transportation of deceased, it is not taxable. So end of the day, there is no GST. Why should we think, what if he dies midway, halfway, 30% route? Why all that? It's okay. No GST. Yeah, done. So friends, these are the 6 cases where it is neither regarded as supply of goods nor supply of service. What are 6 cases? First one, service by employee to employer in the course of employment. Second, service by court or tribunal. Third, service by MPs, MLAs, or any public servant. Fourth, services of funeral, burial, crematorium, mortuary, including transportation of deceased, sale of land and building, except construction service. So if I buy any apartment before completion, then definitely it is taxable. The builder or the person who is constructing apartment will definitely ask us to pay GST. And what is the last one, guys? Actionable claim other than betting, gambling, lottery. Very, very important. So this is a story of which section, my dear friends? Section 7.2a. Section 7.2a, which stands for what? Transactions which are neither regarded as supply of goods nor supply of service. How many points are there, sir? 6 points are there. What is the first one? Service by employee to employer in the course of employment. Then services by what? Court or tribunal. Then services by MPs, MLAs, or any public servant. Then services of funeral, burial, crematorium, mortuary, including transportation of deceased. Then sale of land and building, except construction services. Finally, actionable claims actionable claims other than betting, gambling, lottery. Clear? So there are 6 points which are neither regarded as supply of goods nor supply of service. 7(2)(a). So which section deals with the concept of supply? Section 7, which deals with the concept of supply, in which we have got so many subsections, my dear friends. Let's proceed. Good. So friends, moving forward, we have got some brilliant section known as section 8, which deals with the concept of the taxability of composite supply and other one, mixed supply. Now, what is composite supply? First of all, you would have heard this word. Composite supply means those which are naturally bundled, and one of which is principal supply. One of which is what supply, sir? Principal supply. For example, when we buy a TV, we get a remote. Or when we buy some particular product, we get a warranty. Or for more example, when we go to a hotel for night stay, for an accommodation, morning they provide a complimentary breakfast. So we actually went for what? Accommodation. But we also got a complimentary breakfast. So it's what bundled, my dear friends? Naturally bundled. And one of which is what? Principal supply. Principal supply is something like a main supply. Clear, friends? And what law told is that composite supply is taxable at the rate of principal supply. Come on, how do we tax composite supply, my dear friends? Composite supply is taxable at what rate? Composite supply is taxable at the rate of principal supply. And what is principal supply? Principal supply is that supply which is predominant in nature, the main kind of supply. But whereas other side, when we talk about mixed supply is something like which are not naturally bundled. For example, in sweet shop, Diwali time or important seasons time, what they do is they pack dry fruits, different dry fruits like cashew, badam, pista, all different dry fruits, they pack in a box and sell. Are they naturally bundled? No. Separately, if you want, can you get your cashew, badam and all? Yes. So they are not naturally bundled. In that case, what they told is that mixed supply is taxable at highest rate. So basically, out of that cashew, almond, pista and all, we see which rate is the highest rate. And that rate of tax we apply for the entire box or the entire dry fruit box. We apply the rate whichever is highest. Getting clarity? Friends, very interesting point, my dear friends. Which section all this? Section 8, which talks about the taxability of composite supply and mixed supply, which clearly says that composite supply is taxable at the rate of what? Principal supply, and mixed supply is taxable at highest rate. Yeah. 1-2 questions before I proceed. Yeah, somebody has asked example. I already told example for mixed supply is the package of dry fruits. Composite supply, night stay when we go for hotel, morning we get complimentary breakfast. One more example, when we go in a flight, they might give some snacks on board. Even they're giving snacks, we do not go for snacks. Primarily our objective is travel. The food or snacks, what they gave is only complimentary. Then somebody is asking, so when it is complimentary, there is no price involved. Then how is it taxable? You have to apply logic. When something is given free, in life nothing will come free. It is directly or indirectly covered in that only. When they charge some price, that price covers everything. For the sake of telling, they tell free. For example, if you go to a laptop shop and they tell laptop you buy, charger is free. Will you agree that it is free? Answer is no. It's quite inevitable that they give a charger along with laptop. Next. Somebody is asking, sir, in composite, both must be taxable or one can be exempt? Good question. Friends, let me tell you, in composite, it should be 2 or more taxable supplies. Definitely to call it as taxable, it should be 2 or more taxable supply. No doubt about it. Yeah. One more question. So I can explain the point which was asked in last exam where it was billed separately in subjective part. I know this question. I've seen that question. I also covered this question and we already posted on YouTube past exam paper. But let me tell you very clearly once again the answer. That is, billed separately or not is not the criteria. The whole criteria is whether it is naturally bundled or not. If it is naturally bundled, it becomes composite supply. If it is not naturally bundled, it becomes mixed supply. But one problem is that in order to call it as mixed supply, it should be sold for a single price. It should be for single price. That's for sure. So, for example, in my case, when I told you dry fruit box, cashew, badam, pista, if the price is separately charged for cashew, separately for badam, separately for pista, then it is not a composite. It is not a mixed. Then we'll charge separate rate of tax for each item. Because it is not composite, it's not mixed. Because the condition in composite is that it should be naturally bundled and it should be 2 or more taxable. And the condition in mixed supply is that it should be for a single price. That is the condition there. Yeah, good. Somebody is asking, sir, what is the disadvantage in case of composite supply? There is no disadvantage. Composite supply, we tax at the rate of principal supply. We are not talking about advantage, disadvantage. How do we tax it? That's all. Yeah. Next. Supply of food in restaurant. Is it goods or service? It is very clearly a service, my dear friends. It has been clearly clarified that restaurant activity is deemed to be a service and it is not a supply of goods. It is very clearly a supply of service. That's it. So before I proceed to the next discussion, one small point, since some student raised a query on this, let me tell you, sir. So let's say there is a PQR builders who are constructing an apartment. Come on, what are they doing is constructing an apartment. Now let's say there is one person, Mr. X. What is it, my dear friends? Mr. X. This Mr. X approached PQR builders and he booked a flat for 1 crore and paid advance of 10 lakhs. And PQR Limited stated that we will hand over after 1 year. Because flat should get ready, no? It takes time for the apartment to get ready. But starting only, they keep collecting advances because they want money in the course of construction. Clear, friends? Now, question is, will GST apply? 100% answer is yes. What they told is that if entire amount is received after OC, OC stands for occupancy certificate, also called as completion certificate. If entire amount is received after OC, I repeat, entire amount received when, sir? After OC or CC completion certificate, then GST will not apply. Even if 1 rupee also is received, I repeat, even if 1 rupee also is received prior to occupancy certificate or prior to completion certificate, I repeat, if 1 rupee also is received prior to occupancy or completion certificate, then definitely GST will apply. GST will not apply only in a case where entire money is received after issuance of completion certificate. If entire money is received after OC, then GST will not apply. But even if 1 rupee also is received prior to OC, then definitely GST will apply. Now you might ask, sir, what if part amount received before OC, part amount received after OC? Even though part received before, part received after, on full value GST will come. Don't think this part GST will come, that part GST will not come. Nothing like that. What they told in law is very clearly, if entire amount is received after OC, then only no GST. But even if 1 rupee also comes before OC, GST will come. Clear? Good. Some question? Supply of burger by McDonald's Is it goods or service? Of course it is service. Then, sir, before completion certificate, but after first occupancy, then also GST will not apply. Yes, GST will come only on first sale. So for example, if PQ are sold to X and X is again selling to Y, X is again selling to what? Y. The transaction between X and Y, GST will not come. GST will come only for transaction between PQR and X. For transaction between X and Y, GST will not come into picture. GST will come only for actual builder and the customer. But if customer is selling to another customer, GST will not come into picture. Getting clarity, guys? Very, very, very important concept, please. It's an important, no doubt about it. Yeah, let me check another query. Some other query. Sir, what is the benefit to government after CC on construction? Logic is simple, my dear friend. It is not a benefit to government and all. Once completion certificate is done, that means if completion is over, that means it becomes like a normal land or building. Then GST will not come. Once completion is over, it is like a normal land and building. Once it is normal land and building, GST will not come into picture. That is the point what you have to note here. That is why we wrote that line, sale of land or building except construction service. So for construction service, GST will come. But for sale of land or building, GST will not come. So once completion is over, GST will not come into picture. Provided entire amount is received after OC. If entire amount received after OC, then only GST will not come into picture. That is the point to be noted. Very, very interesting and important concept. Next. That is end of story of this beautiful topic known as supply, dealt by section 7 and section 8. Section 8 deals with the concept, section 7 deals with the concept of supply. Section 8, as we discussed, it was talking about composite supply and mixed supply. Composite supply is taxable at the rate of principal supply and mixed supply is taxable at highest rate. Mixed supply is taxable at what rate, sir? Highest rate we will tax mixed supply. But composite supply is taxable at the rate of principal supply. Important concept, friends. Yeah, next. Let's proceed. Without delay, my dear friends, today I also want to spend time with you on one more interesting topic, a small topic, but very, very important topic known as value of supply. Sir, I'm spending time with you on all the major topics where high possibility that question will trigger the exam. And value of supply is one such topic which is coming in the exam on almost every time. Every time for 5 to 6 marks, it is coming in the exam. Clear, friends? Very, very important. So today I really want to spend time on value of supply. And tomorrow I'll spend a lot of time on discussion about one more great topic called input tax credit. So I want to stress upon those major important topics where major chunk of your marks will come in the exam. So that your time, my time makes a lot of sense. That's the whole idea there. Yeah. One more question. Sir, will GST apply on entire amount in case of prior to OC? As I told you, even if 1 rupee advance also received prior to OC, GST will apply on entire amount. But if entire amount is received after OC, then GST will not come. That is the answer. Done. Without delay, let me proceed to start discussion about another beautiful and interesting topic known as the concept of value of supply. Some topic which makes a lot of sense, almost coming in exam every time. So far, there has never been a paper where question is not there on value of supply. So you understand how much importance is there for this. And this value of supply concept is dealt by section 15. And in 15, we have got 15.1, 15.2, 15.3. And you have 15.4 and 15.5 also, but that is relevant for you at CA final level. Because 15.4 says if value under 15.1 is not acceptable, then we'll do the valuation as per rules. 15.5 says for certain special supplies, we do valuation as per rules. We have got some important valuation rules which is not there at CA inter level, but it is relevant for CA final level. So when we go to CA final, there we'll talk in detail what are the important valuation rules we got. But now let's not waste our time. Now it's relevant only to talk about value of supply 15.1, 15.2, 15.3. What is that? That we look into it. 15.1 says value of supply shall be transaction value. Common sense point. What is transaction value? Transaction value is nothing but the value at which transaction is done. Correct? No? But one extra line I'll add here. Transaction value, that is, come on, value of supply shall be what value? Transaction value. That is price paid or payable. What is the line? Price paid or payable. When supplier and recipient, what is the line? Price paid or payable. Paid means what? Actually paid. Payable means it is still due, accrued, but not yet paid. Price paid or payable when supplier and recipient are not related, and the price is sole consideration. What is the line, guys? Value of supply shall always mean transaction value. It refers to what? Price paid or payable. Paid means what? Actually paid. Payable, yet to be paid. So value of supply shall mean what, my dear friends? Transaction value, which refers to price paid or payable. When, come on. Supplier and the recipient are what? They are not related. They are not related at all. Why? What is the logic of this related point? Because, my dear friends, you have to apply common sense. When two people are related persons, generally the price will not be the proper price. It will be definitely an inflated price or deflated price. Because related person, the price won't be proper. It won't be in sync with the market value. Clear, friends? Go on. What is the line here? Value of supply shall mean what? Value of supply shall mean transaction value, which refers to what? Price paid or payable when supplier and recipient are not related. Now you might get one doubt. Sir, what if they are related persons? If they are related persons, we have got special valuation rules, which is not there in CA intern, it's there in CA final. Yeah. Value of supply shall mean transaction value, which refers to price paid or payable when supplier and recipient are not related and the price is sole consideration. That means the price is the only consideration. There is no other consideration apart from money. There is no other non-monetary consideration or some other feelings or emotions. If it is there, we'll apply valuation rules, which is there in CA final. Come on, what is 15.1? Value of supply shall always mean what? Transaction value, which refers to price paid or payable when supplier and recipient are not related and the price is sole consideration. And 15.2 talks about inclusions to transaction. In this, we have got 5 points that will take some time. We'll talk in detail. Important. Inclusions to transaction. And 15.3 talks about exclusions from transaction, in which we have got 2 points that also we'll talk in detail. Clear, friends? So we need to talk 15.2 and 15.3. What is 15.1? Value of supply shall always mean transaction value, which refers to price paid or payable when supplier and recipient are not related, but the price is what consideration? Sole consideration. That's an important point. So 15.1 says value of supply shall always mean transaction value, which refers to price paid or payable when supplier and recipient are not related and the price is sole consideration. 15.2 is what? Inclusions to transaction value. 15.3 exclusions from transaction value. Let's see what are those. Section 15(2). Inclusions to transaction value. That means what? What all we will add to this transaction value? In this, we have got 5 important points, my dear friends. Listen carefully. Okay, let me go one after other. First point, 15(2)(a). 15(2)(a). Any tax, duty, cess, fees, etc. Any tax, duty, cess, fees, etc. except GST. So what is the line, my dear friends? Any tax, duty, cess, fees, etc. except GST charged by supplier from recipient. Guys, I hope the screen is visible for all of you.
Yes, sir.
Yes,
Yes,
perfect.
sir.
So 15(2)(a) says what, my dear friends? Any tax, duties, cess, fee charged by whom, sir? Charged by supplier from recipient. One second. Yeah. Any tax, duties, cess, fees except GST charged by supplier from recipient. So, for example, if any supplier charges any tax or any duty or any cess, anything except GST from the recipient, that will be included in the value of supply. But one special point to be noted, that special point is something like this. TCS charged by supplier. Let me add one line here. That is TCS under income tax. TCS under Income Tax Act. Practical and Income Tax Act, we have got some concept known as TCS. For example, when we buy one motor vehicle for more than 10 lakh rupees, that motor vehicle dealer, apart from that 10 lakhs, he will also take extra 1% from us. That is something like a TCS, tax collected at source. TCS under income tax shall not be included. Or a right full line here. TCS under income tax charged by supplier from recipient shall not be included. So in general, what is the line told? In general, the line what they told is that any tax, duty, cess, fees charged by supplier from recipient, that is included. But one special case what they gave, any tax collected at source under income tax, that will not be included. That special point you have to keep in mind. Clear, friends? Please, very important. Yeah, good. So for example, let me ask you one question now. So let's say there is a owner. There is a tenant. Owner is collecting a rent of 10 lakhs. And apart from 10 lakhs, I repeat, apart from how much, my dear friends? 10 lakhs. How much owner is collecting actually? Owner is collecting 10 lakhs from the tenant. Apart from 10 lakhs, owner also collected municipal tax of 1 lakh. Actually, municipal tax who is supposed to pay? Municipal tax who is supposed to pay is the owner. But municipal tax owner collected from tenant. In that case, law is telling GST will apply on 11 lakhs because any tax, duty, cess, fee charged by supplier from recipient will be included. Yeah. Some query. Sir, what is the logic that TCS is not included? Yes, my dear friend, let me tell you the logic. The reason why TCS we don't include because whatever TCS is collected by supplier from recipient, that will become a TCS credit for the recipient. So it's something like an interim levy in between some tax collected for which credit will come again to the recipient. Because when we file income tax return, whatever TDS, TCS is there, will reduce that, no? Balance only we pay. So it's something like an interim levy. That's why it is not included. That is why it's a special point. that any TCS and income tax charged by supplier from recipient that will not be included. So this is the story of 15(2)(a), any tax, duty, cess, fee charged by supplier from recipient is included, except GST and of course TCS and income tax. Then next point. Section 15(2)(b), simple but very powerful. That is supplier's obligation. Come on, whose obligation, sir? Supplier's obligation. Before that, somebody is asking, sir, whether TDS will also be included? Of course, yes. TDS is a part of transaction only, no? Whenever recipient is making payment to supplier, if TDS is applicable, he will do TDS and pay. For example, sir, listen. When I give service to my client, I give a bill of 1 lakh. My client will actually do 10% TDS under 194J and give me 90,000. But when I charge GST, I will charge GST on 1 lakh only, no? I won't charge GST on 90,000. I'll definitely charge on 1 lakh. Basic point. I hope you got it. Yeah, coming back. 15(2)(b), supplier's obligation. Come on, whose obligation? Supplier's obligation in relation to supply. Supplier's obligation in relation to supply is met by the recipient. That means something what supplier was supposed to incur, it was incurred by recipient. Basic fundamental point, supplier's obligation. That means what supplier is supposed to incur, that is being spent by whom? That is being spent by recipient. That means indirectly supplier got some more extra benefit. That is also included in value of supply. So 15(2)(a) told what? Any tax, duty, cess, fee charged. 15(2)(b) told what? Supplier's obligation in relation to supply met by recipient. Then section 15(2)(c). Any incidental expenses, or practical example for incidental expenses is packing charges, weighing charges, they are called incidental expenses. Any incidental expenses or anything charged by supplier from recipient is included. So 3 points done. 2 more points are there. What are the 3 points we have done? First one, tell me guys. Any tax, duty, cess, fee charged by supplier from recipient. Then 15(2)(b), supplier's obligation in relation to supply met by recipient. Then what is 15(2)(c)? Any incidental expenses. Any what expenses? Incidental expenses or anything charged by supplier from recipient. So any amount what supplier takes from recipient, that will be included in the value of supply. No second thought about it. Then next point, very, very important. Listen very carefully, sir. Listen. So let's say Reliance sold some goods to one person, Mr. A, let's say for 10 lakh rupees. And they clearly told that while selling the goods for 10 lakh rupees, they clearly told that payment should be made within 30 days. And if not paid within 30 days, Reliance will charge extra 50,000. Now, common sense point, this extra 50,000 what they are collecting is something like a interest. This extra 50,000 what they are collecting is something like any interest or any penalty, something like that. Getting clarity, friends? Now, what they told in the law is that will this interest, late fee, penalty be included? They told as per section 15(2)(d), any interest, late fee, or penalty. Come on, what is the line, sir? Any interest, late fee, or penalty charged by supplier from recipient is included. Very, very interesting line. Come on, what is included, sir? Any interest, late fees, penalty. Any interest, late fees, penalty charged by supplier from recipient, that will be included. And moreover, I repeat, guys, moreover, such interest or late fee, or moreover, such interest or late fee or penalty is treated as inclusive of GST. How do we treat it, my dear friends? We will treat it as inclusive of GST. So, treat it as including GST. What will happen then? The value will be 100 plus 100 divided by 100 plus rate, and the GST will be rate divided by 100 plus rate. That's how we do it. No doubt about it. So generally, this interest, late fee, penalty, we always treat it as including GST. Yeah. Some question? Sir, will GST compensation cess will be included? Answer is no. Any tax, duty, cess, fee except GST. So GST also covers GST compensation cess. That is also not included. So anything related to GST is not included to determine the value of supply. Clear? Good. 4 points are over. 15 to A, 15 to B, 15 to C, 15 to D. 15 to A says what? Any tax, duty, cess, fee charged by supplier from recipient. 15 to B, supplier's obligation in relation to supply met by recipient. 15 to C, all incidental expenses or anything charged by supplier from recipient. And 15 to D, any interest, late fees or penalty charged by supplier from recipient. Finally, last one, but very, very important point. Listen carefully, sir. Yeah, some query. Late payment is charged after some time, but not at the time of creating invoice. Yes, separately they'll charge, separately they'll pay GST. Yes, correct. Next. Sir, if interest is including GST, then it might be double taxation. Why double taxation, sir? Please understand, my dear friend. Let's say 50,000 we got, and the GST rate is 18%. Then how are we going to include this in value of supply? 50,000 into 100 by 118. Some figure will come. And on that figure, we will charge 18%. So only one time we are taxing, not double tax. Please understand, there is no double tax at all. We are doing inclusive GST because of a reason that we should not do double tax. Clear? Good. This 15 to D story. Next. One more question. Sir, whether LPG is taxed under GST, I already told you. Petroleum crude, high-speed diesel, motor spirit, natural gas, aviation turbine fuel. These three are temporarily kept outside GST. Yeah, next. Next point. That is 15 to E. Simple point. Any subsidy. What is that line, sir? Any subsidy. Before that, 1, 2 more queries are there. Let me answer them. Sir, what if interest or late fees is first charged, then later is refunded? Will that still be included in value of supply? If you first charge, you have paid GST. Again, when you refund, you give a document known as credit note. Sir, again, people are asking doubt about interest. Let me give a small example, sir. Let's say the price is 1 lakh. Okay, guys, price is 1 lakh. Interest charged extra is 30,000. And this 30,000 we will treat as including GST and assume GST rate is 18%. So what is the interest value before GST? We will calculate as 30,000 into 100 by 118. Let me show you the working, don't worry. 30,000 into 100 divided by 118. This is coming to 25,423.7. So let's take it as 25,424. So the value before GST is what? 25,424. Correct, no? So when I add interest here, I will take it as 25,424. Total figure 1,25,424. This is nothing but my value of supply. Now, when I calculate GST, how will I calculate GST? 1,25,424 into 18%. So please understand, there is no double taxation at all. A lot of students are asking the same question. Sir, there is double tax, there is double tax, there is double tax. There is no double tax at all, my dear friends. Please understand that. There is only single tax. There cannot be double tax at all. At any given point of time, at any cost, double tax cannot come into picture. Clear? And you should also get one reason why we are practically treating as inclusive of GST. Because, sir, we all know that GST is an indirect tax, which supplier should collect from recipient. But practically, with respect to interest, late fees, penalty, first of all, customer is crying. They are asking for what? Interest, late fee, penalty. Again, if you ask GST, he will shout at you. So practically, we don't take GST separately for interest, late fee, penalty. That is the reason why we say that this interest, late fee, penalty is including GST. Clear? That is about 15(2)D. What is 15(2)A? Any tax, duty, cess, fee charged by supplier from recipient. 15(2)B, supplier's obligation in relation to supply met by recipient. 15(2)C, any incidental expenses or anything charged by supplier from recipient. 15(2)D, interest, late fees, penalty charged by supplier from recipient. And finally, 15(2)E, that is any subsidy linked to price. For example, government gives some subsidy or some NGO gives some subsidy, all that will include, but some special point is there. Any subsidy linked to price except subsidy from central government or state government. So if any subsidy is coming from central government or state government, that we don't include. But any other subsidy which is not coming from central government or state government, that is definitely included. So I'll just one example here. So let's say there is one person, Mr. A, who is a laptop dealer. Now there is one trust. There is one trust which approached this laptop dealer for purchase of laptop. Okay, guys. Now, what has happened is there one company, TCS, Tata Group. What they told is, Mr. A, the laptop price originally is 1 lakh, but what you do, you give to the trust only at 70,000. Now, balance 30,000. Tata told that 70,000 only you charge from trust. Balance 30,000 I will give you. So, what did Tata say? Tata told Mr. A, saying that, my dear Mr. A, from trust, please collect only 70,000. Balance 30,000, I will give. Now tell me, in this case, Mr. A point of view, GST will come on what value, sir? Come on, please type in the chat box.
1 lakh rupees, sir.
Type in the chat box, please. Yeah. Definitely, my dear friends, no doubt about it. GST will definitely apply on 1 lakh because any subsidy linked to the price is definitely included in value of supply. But imagine, instead of TCS, if that 30,000 is given by central government or state government, then GST will come only on 70,000 because any subsidy linked to price except subsidy from what? Central government or state government. So if subsidy is coming from central government or state government, then that is not included in the value of supply. Interesting concept. So one student is asking one doubt, sir, in general, what is that word? So generally government only gives subsidy. So what is the importance of 15(2)(e)? Generally government gives. What if other than government gives? That is a 15(2)(e). Practically possible. Some charitable trust or some NGOs or some private companies, they might also give subsidy. Possible. So what is 15(2)(e) guys? Any subsidy linked to price except subsidy from central government or state government. That's it. Inclusions to transaction value is over. We have got 5 points there. What are 5 points? First one, come on. Come on guys, what are the first 5 points? First one is what? Any tax, duty, cess, fee, except GST charged by supplier from recipient. Then 15(2)(b), supplier's obligation in relation to supply met by recipient. Then 15(2)(c), all incidental expenses or anything charged by supplier from recipient. 15(2)(d), any interest, late fees or penalty charged by supplier from recipient. And finally, last one, 15(2)(e), which talks about any subsidy linked to price except subsidy from central government or state government. That is included in value of supply. That is the story of this concept of 15(2), inclusions to transaction value. So let me discuss the last concept in this value of supply so that we can close this. That is section 15(3), which talks about exclusions from transaction value. That means what all will reduce from transaction value. In this, guys, we have got only 2 points. One is very, very simple, but one point will take time. What is that? Listen carefully. In this, we have got 15(3)(a) and other side 15(3)(b). 15(3)(a) talks about discount recorded in the invoice. In the invoice itself, they gave some discount: trade discount, cash discount, quantity discount, turnover discount, rebate discount, that discount, this discount. In GST, it doesn't make a difference what type of discount it is, whether it is quantity or trade or cash. What is it? We don't know. But if discount is recorded in the invoice, that will reduce. That will reduce. Excluded from transaction value. So we have to reduce it. But other one is most important. That is 15(3)(b), which talks about post-supply discount. This is important. Generally, we give discount at the time when supply is made. Generally, we give discount at the time when supply is made. But now I'm talking about special case of post-supply discount. We are giving discount after supply is made. Listen. Discount given after supply is made can be reduced, provided, this is very important, provided means what? Conditional. Provided there is an agreement existing. What existing? Agreement existing at the time of supply. That means starting itself, we know that tomorrow we'll give discount. Agreement is there at the time of supply itself. That is a very, very important point. It cannot be something like a random discount which is suddenly decided. It cannot be like that. It should very clearly be an agreement existing at the time of supply. Provided there is an agreement existing at the time of supply and such discount is linked to invoice. Such discount is what, sir? Linked to invoice. For the first condition, there should be agreement at the time of supply. Number 2, the discount should be linked to invoice. And proportionate credit, that is ITC. So we know that starting when supplier gave a bill to customer or recipient, he would have charged GST. Now that GST recipient would have taken the credit. Now discount is coming subsequently, sir, post supply discount. Then what supplier is doing is reducing the tax. When supplier is reducing the tax, recipient should also reduce the input tax credit. Because output tax coming down, input credit also should come down. Logic is simple, no? If output tax is coming down, input credit also should come down. See now, and proportionate credit should be reversed by the recipient. This language is a very, 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 very important language. So if you observe carefully, my dear friends, there are three interesting conditions what they have covered there. Interesting condition number one, agreement is existing at the time of supply. So what is the first condition? Agreement existing at the time of supply. Agreement existing at the time of supply. Number two, the discount is linked to an invoice. The discount is linked to an invoice. Finally, last condition, my dear friends, proportionate credit. What credit? Proportionate credit is reversed. Proportionate credit is reversed by the recipient. So these are the interesting cases. What they are very clearly covered there, my dear friends. Come on, what are the interesting cases? Tell me guys. Case number one, agreement is existing at the time of supply. Number two, it is linked to an invoice. Number three, credit is reversed by recipient. So for example, guys, let's take a small example. There is one company known as Asian Paints. What they have done is, they have sent some stock for 10 lakhs to one dealer. Okay. Now on this 10 lakhs, GST is charged at 1.8 lakhs and dealer also took input tax credit. Now starting only, while sending only, agreement is there stating that if stock is not sold, what is not sold? Stock is not sold within 1 month, then company told they will give 10% discount. Now I'll ask you one question. Is this discount given starting itself? Answer is no. This discount is something what they are telling that they'll give in the future. Post supply discount, which they are telling I'll give this discount if some stock is not sold within 1 month. And assume stock is not sold within 1 month. Assume. Then what will happen? Asian Paints, from their point of view, what is the condition number one? Agreement should be there. Is it there? Yes. Condition number two, discount should be linked to invoice. Is it linked to invoice? Answer is yes. Condition number three, proportionate ITC to be reversed. Who should reverse? The dealer should reverse. How will reverse that credit? What is that ITC? 10% discount he got, no? That means what? 10% of 1.8 lakhs, which is nothing but 18,000. This ITC should be reversed. Because for Asian Paints, output tax is coming down. For when supplier output tax is coming down, for recipient, input credit also will come down. This is an important story of section 15.3b. Very, very important. So section 15.3, exclusion from transaction value, we have got two cases, 15.3a, 15.3b. 15.3a, discount recorded in the invoice. 15.3b, post supply discount given after supply is made. But conditions, number one, agreement should be existing at the time of supply. Condition number two, it must be linked to an invoice. Condition number three, proportionate credit to be reversed. And practically for reversal like that, I'll tell you practical point. Asian Paints will give a document to dealer known as credit note. For reversal of input tax credit, company gives to dealer a document known as what note, sir? Credit note. That's it. That is the story of this interesting point known as section 15.3, and that is the story of this beautiful topic known as value of supply. Clear, friends? So guys, today's discussion, if you observe, we are done with some important topics like number one, supply. We discussed basics. We also discussed value of supply. And tomorrow's session, I would like to spend some good time with you on a beautiful topic known as input tax credit. And I'll also touch upon some important areas like composition scheme. Few special points are also there. That also will spend some very good time. Clear? And I'll touch upon the topics like exemption, registration, wherever important elements are there which come for your exam. Those all areas we will discuss. Don't worry. Time of supply also I'll give overview. Clear? All the major important topics I'll clear in detail with you guys here very perfectly. Then somebody is asking, sir, are there any amendments? All the amendments, separate videos already provided on the YouTube channel. Don't worry. Clear? Good. Done, guys. Thank you so very much for all your time and patience, guys. Thank you for this beautiful time what you have spent me and given me, guys. I'll make sure that every minute and every time you guys give me, I'll make sure it is fruitful and very much helpful for your exam. Thank you so very much. Take care. See you next session with some more very, very interesting topics. Thank you. Take care. Bye-bye. Thank you.